Jean Cradell is a resident of Brightsville Beach in North Carolina. She's among 1.5 million people who've been ordered to evacuate before Hurricane Florence hits, but she hasn't left.
We've been here 30 years, over 40 years, and been through lots of storms, and this is by far the biggest. And I think that things are going to happen tomorrow that will be catastrophic to a lot of people.
The Federal Emergency Management Agency warns staying here could be deadly and says the damage will spread far beyond the coast.
If you've been asked to leave, get out of the areas that are going to flood and get into a facility that can withstand the winds. Let's set the expectations as well. This has an opportunity of being a very devastating storm. The power's going to be off for weeks. You're going to be displaced from your home in the coastal areas, and there will be flooding in the inland areas as well. So these are going to be statewide events. The hazards will be statewide.
Experts say insurance claims from the natural disaster could tally up to $20 billion. Another $10 billion in uninsured damages are expected from the initial storm surge, and billions more may be spent to deal with catastrophic floods, restoration of the infrastructure, and rehabilitating communities. President Donald Trump says the government will spare no expense in dealing with the imminent crisis.
The safety of American people is my absolute highest priority. We are sparing no expense. We are totally prepared. We're ready. Any amounts of money, whatever it takes, we're going to do.
Even before it makes landfall, Hurricane Florence is stirring up a storm in global energy markets. On Wednesday, the rush to fuel up pushed the price of Brent crude up by more than 2%, reaching almost $80 per barrel. Experts say the Gulf of Mexico, which is the major oil producer in the region, is not at risk, and that the spike in demand should end soon. But getting back to normal will be a long and costly affair for the people of North Carolina and Virginia. Mobin Nasir, TRT World.
Stephen Schork joins me now from Villanova, Pennsylvania. He's the founder and editor of the Schork Report, a daily newsletter on energy and financial markets. Stephen, great to have you back on Money Talks. Let's talk about Hurricane Florence. From an oil industry point of view, it looks like it's going to miss that all-important Gulf of Mexico oil-producing region. But what sort of energy assets are there in the target range of the Carolinas?
There really isn't, and this is what is really so kind of perplexing about the moonshot that we've seen over the past 2 days in crude oil prices. You do have one asset, that is the Colonial Pipeline, and that is the main conduit that takes gasoline and diesel from the Gulf of Mexico refinery epicenter and moves it up through the East Coast into the final delivery point in New York Harbor. But that said, the Colonial Pipeline is in the western part of the state over by Charlotte, well far away from the major impact, the flooding zones of what we're expecting to see out of Florence. So the fact that we are moving higher, I believe this is just a headline that is being hyped, that is scaring a lot of weak money to cover shorts and to buy into this. You do have a short-term phenomenon that we do see with every single hurricane, and that is the stockpiling. So people are, of course, clearing the grocery shelves. They are topping off their gasoline tanks, their diesel fuel tanks. You have 1.5 million, maybe 2 million people on the road now consuming a lot of gasoline. But this is going to be short-lived because after Florence hits, after Saturday, you're going to be dealing with major flooding, major road damage. You're going to see a serious impact, a negative impact on gasoline demand over the next 2 weeks. So this is rather a peculiar rise in oil prices at this point.
Generally, when you look historically, how sensitive are oil prices to natural disasters, especially in the U.S.?
It's a really interesting phenomenon. 10 years ago, they were highly volatile, very closely related to natural disasters. But over the past 10 years, what, of course, we've seen here in the United States is now the United States is the world's largest crude oil producer. And a lot of that oil is being produced, of course, in West Texas and in North Dakota. away from where our traditional production used to be, and that was the shallow water Gulf of Mexico. So when you had the majority of your production coming out of the Gulf of Mexico, then yes, you were very susceptible, especially to hurricanes. But now that you start to see this production coming in different parts of the country, far away from regions that do not normally see natural disaster, energy prices from a production standpoint are not as vulnerable. Where the real vulnerability is in refinery production, because of course the bulk of U.S. refineries are in the Gulf of Mexico. So when you see a hurricane, and by the way, there is a hurricane that is churning out there, Isaac, that could potentially make its way into the Gulf of Mexico over the next couple of weeks. That is potentially supportive of price. But a hurricane coming in to the East Coast, the southern East Coast, North Carolina, South Carolina, according to the latest trajectory, you're really not putting any sort of infrastructure into place. Therefore, from a fundamental standpoint, you really don't have a lot of correlation between this event and price action.
Okay, Stephen, the weather is, of course, not the only thing that's driving the energy markets at the moment. There is the small issue of Iran. Now, Japan, South Korea, they look like they're about ready to stop buying Iranian oil. How big a factor is Iran right now in pushing oil prices higher?
You know, it's an interesting question because we've known about the sanctions on Iran all summer long. And all of a sudden now this is supposed to be a bullish event. At least this is what the crude oil bulls want you to believe. But as we said, we've known about this event for the last several months. So if we've known about this event, according to the efficient market theory, has been priced into the market. That's not to say that we are going to see disruptions. We are going to see situations, especially in Europe, that supplies will be challenged into the Far East. Here in the United States, the Trump administration has released or is about to release 11 million barrels of crude oil in October out of the Strategic Petroleum Reserve. That move is meant to coincide with the effect of the Iranian sanctions. We have to keep in mind that these sanctions are going to affect at the weakest demand point of the season. So it still remains to be seen, but I'm confident, given the clear heads up that the market has over the last several months, that this event was indeed happening. I want to believe that it is priced into the market.
Okay, we're going to have to leave it there. Stephen Schork of the Schork Report. Thank you very much for your time.